sessions, definitely. Obviously, the first big trigger, exit polls, monthly expiry, so important couple of days, Nifty and Bank Nifty. So that's one to watch out for. And in terms of global cues, nothing too great happening there either, except, of course, if you have investments in NVIDIA, you're probably smiling and don't care about anything else in the world. But,
Elon Musk saying we are going to use NVIDIA chips. So what more?
So, I don't know what that means. In fact, we should chat about this for semiconductor manufacturers in India. So stocks like Tata Elxsi, HCL Tech that have a little sort of allocation or sense to the CG power if it's a global theme, how else can you play it if you have to play it through Indian stocks?
Not too many manufacturers, right? But
anything in semiconductor, chip.
More assembly right now, except for one plant of the Tatas. So the Tatas are the only ones who are actually going to go into the details of
so I'll send, we should highlight a report. In fact, BCG has done a whole study on Indian semiconductors and the spaces to bet on. Maybe do a little analysis on that. But those are a few companies that highlighted.
Yeah, but if you're comparing them to an NVIDIA, I would say NVIDIA is streets ahead. We're just starting out. There is a Make in India policy push which helps the local players, but it's in a different sphere right now, or I would say. Anyway, coming back to what happened overnight in markets, it was a holiday on Monday in the US for Memorial Day, so markets were shut. Yesterday, it was a mixed kind of a day, I would say, except for the NASDAQ, which posted a record closed above 17,000 for the first time. So if you see all of the indices, it was really all about the NASDAQ at the end of it. What moved it was, of course, NVIDIA. That's what was exciting all through and through. And, that bet on AI and the way AI is sort of counterbalancing the other biggest factor, which is a possible rate cut, is quite interesting with what's happening in at least the US markets right now. Even in terms of bonds, there was a comment by Neil Kashkari, senior Fed official, which was a bit of a dampener. There was a bond auction which didn't have a great response. So your 10-year is back over 4.5%, and your expectations of a Fed cut in September also is becoming a bit uncertain. So, that's the story there. As far as crude is concerned, there was a bit of a spike in crude prices. Remember, there's a very crucial OPEC Plus meet over this weekend. That's probably not a big factor of what at least domestic retail investors or equity investors would be watching, but nevertheless, it's an important one. Remember, crude prices, despite a production cut by OPEC Plus, have still not been really rising. And this is after so many geopolitical events. Even now, it's about $84 per barrel. So rose sharply overnight, but then tempered off to about 0.5% up on U.S. crude, but the Brent above $84 per barrel. And that's going to be the next big trigger. The expectations are that this group of oil-producing companies will continue their production cuts into the rest of the year, because the first round till June has not really yielded them too many results. Asia's weak, mixed kind of an opening, but largely weak. Nothing great happening in terms of trade over there. On the positive side, possibly following cues from Wall Street as well. And I'm just going to pick up the implied open on what we are expecting today, and it's looking like a sharp cut, perhaps, at open. 112 points down now on the Nifty implied open. So are you going to see sort of that nervousness come in? Remember, the monthly expiries will be the biggest trigger right now ahead of any kind of clarity on elections results, etc. So maybe you're seeing a bit of that. I just want to pull up the flows, fund flows, and Neeraj was talking about the drop at the end of trading yesterday, and look at that, FII's net bought. I don't think we can pull out the party hats yet because it was about 66 crores, and a net buy from DIIs as well. Nevertheless, this is not a market which is completely, smiling from ear to ear right now. It's definitely wondering how to play the next couple of days is what I would say.
Yeah, in the grips of volatility, frankly, that's it. Let's just look at the India VIX, and that tells you the story about how things are shaping up. Mind you, interested in seeing what happens to India VIX on Friday morning post the monthly expiries passed as well. Frankly, it's very difficult for anybody to say with conviction that VIX is up only because of elections or because of expiry or a combination, and how much. So I'm very interested in seeing what the data throws up. But yes, volatile, yes. And Nifty was down again amidst this higher VIX. The good part is that it still closed above some of the key moving averages. And therefore, today's close would also be important from a near-term perspective, considering that we would have the monthly expiry in about 48 hours. The interesting piece also was that PSU banks, on which there was so many positive bets because of perceived falling yields because of the RBI bonanza, led the downtick in trade yesterday. And it was a very defensive day for the market. Frankly, if you just looked at the heat map yesterday, you'd have seen life insurance companies, FMCG companies, maybe a Grasim. That's the kind of bent of the market yesterday. Everything economy facing cracked from an Adani Ports to an ONGC to PSUs, Power Grid, etc. All of that economy facing pockets cracked, and defensives did well. So PSU banks let that fall, but it's not unlikely that we'll continue to see defensives being the likely template in the short term. But I must say, shorts are ruled out. I don't think anybody, and you talk to any trader, they don't have the gumption to go short right now, and which might be the saving grace, that we might not have large people piling in and going short on the market ahead of the numbers, ahead of the exit polls, that is. So that is something that clearly has to keep in mind. And Samina, very likely that we might see the murmurs of exit polls starting to come in before the exit polls actually come in on Saturday. So we have 3 trading days until then. Let's see, because I've already heard
a couple of
people asking me.
People have sent me a couple of notes, I must say, which of course cannot be revealed. It's interesting this time that apart from the 4 or 5 well-known pollsters who tie up with mainstream media, how many entities, and I know one group which is manned by engineers, have been sitting and looking at data over the last 2 years and have their own numbers. Though, of course, before phase 7, it's a bit of a a question mark over there. But yeah, the first set of numbers are floating. We cannot talk about it, and we should not talk about it as per the Election Commission, because there's still one phase to go. But yeah, it's all about the exit polls. I just wanted to add one thing, and this is something which Rajat told all of us yesterday, that more than people going short, a lack of buying sort of takes the oxygen out of the room. And perhaps that's also what you're seeing in the markets right now, where people don't really want to come in and stick their neck out.
But there's lack of sellers as well. So, I mean, I didn't contend with Rajat yesterday, but almost everybody out there in the street is saying that we are not going out and selling for sure. So,
but you're not buying either.
Which is fine. I mean, right now, I'm just saying, so therefore, lack of buyers and sellers would really aggravate the situation. Nobody is going out and doing shorts right now.
Yeah.
I think if people are selling, they're selling out. It's a little bit of a market-neutral rebalancing portfolio strategy. So you might be selling your small and mid-cap funds and reinvesting that into large-cap funds. And I think that could be a sort of a right strategy if you're an investor, right? Because values continues to persist in the large cap space. But yeah, no one is taking profits off the table and sitting on cash. Market neutral strategies of rebalancing is what is potentially underway. But just to put a number to the losses that we've seen over the last 3 days, while independently those numbers look very, very small, just to quantify that, the market cap of the BSE dropped to 417 lakh crores from about 420 lakh crores in the previous session. So investors, traders have lost about 3 lakh crores of market cap in yesterday's trade. Also, real estate had it quite rough yesterday, and also banks are now seeing some resistance. So Nifty Bank is seeing pressure at higher levels. We've talked about how 50,000 was one thing that was in the line of sight if you saw close above 49,600. But as you can see, we've gone all the way down back to levels of 49,142. Another important trigger point is GDP data that the street will be watching out for tomorrow. So you've got that important cue coming in locally, and globally as well. The US will report on those numbers on Friday. So Thursday, Friday are both data-heavy days, and Friday also will see the kickoff of auto sale numbers. So lots of other factors along with elections that could be impacting the Wix, but most analysts believe you could be heading to levels of 26, 27 on the India Wix over the next couple of days. So at 24, we look uncomfortable, but further upside cannot be ruled out at this stage. 500 companies are going to be reporting earnings today, and you had a whole bunch of them that reported yesterday as well, and quite a few post-market hours. Not very large in terms of market cap, but lots from the broader market have come out and reported, and that's largely the stocks that you see react sharply one way or the other to their earnings reporting. NBCC was quite rough in trade yesterday. Neeraj mentioned how PSU stocks have been seeing selling pressure. NBFC was no different. The stock was down 4.5%. But the good news is the earnings that they reported are actually not so bad. They've seen an expansion on top line and bottom line. Revenues were up a whopping 43%, a report at 4,025 crores, which is a clear beat to the Bloomberg estimates of 3,600 crores. Margins have expanded double, so they've come in at 6% versus 3.7%, and the estimate there was 3.8%. So you can only see the kind of beat that NBCC has put out in terms of earnings reporting. Net profit was also up 24.5% at 141 crores. And the good news is these numbers have no exceptional or unusual activity in the quarter that's actually helped those earnings. It's largely core business. So you should see a good sort of reaction to NBCC on those earnings. Along with that, we've been talking about auto ancillary, and how that's really been the flavor over the last couple of weeks. Amara Raja Batteries reported earnings, pretty fantastic quarter for them too. Profits were up 62% to come in at 229 crores versus 142, and revenues have also risen sharply, up 20% at 2,907 crores. Margins as trading have ended flat, but the top line has been phenomenal, and that's of course reflected in terms of profitability as well, even though margins have remained muted for this quarter. Brigade Enterprise, we've talked about this all quarter, where they've had massive sort of plans. Their pre-sales pipelines are looking good. They've gone on and expanded pretty aggressively beyond their home market of Bangalore, and that's reflecting in their earnings. The stock had it rough, like most of the market in trade yesterday. In fact, real estate, remember, was the top loser, so Brigade was no different. But their numbers are good. Their revenue has spiked about 100% to 1,702 crores versus 842. And profit has also jumped substantially to 210 crores versus only 63 crores that we saw in the same quarter last year. So if the sentiment supports it, I think Brigade Enterprise numbers are definitely a standout, at least in the case where we've seen not too many real estate players perform as well, at least when you look at those numbers. Pre-sales apart, but earnings reporting hasn't been phenomenal for the sector.
And I just find it interesting how every real estate player justifies it. I was speaking to one yesterday as well on their numbers. So they're very clear that pre-sales is what matters. And then I asked the question that out of these pre-sales, how many result in cancellations? Because remember, pre-sales value is the booking amount, right? And the industry average is still 10 to 20%, which is fairly high. Because at the end of the day, people who've booked those apartments have to then pay for it, and the payment is, linked to construction, etc. So it's more complicated than just seeing that one number. Nevertheless, Prestige numbers were also out, and since we talked about Brigade, let me just go through what we saw in terms of Prestige before I get to the rest. Revenues down 18%, revenues at 2,164 crores versus 2,632, so those are down. EBITDA was up 21%. Margins have seen a healthy growth actually. It'll be interesting to speak with the company and figure out what's happened there this quarter. Net profit down 53%. So again, with all the vagaries of real estate, account for some projects maybe being shifted to the next quarter, all kinds of adjustments there in terms of what projects are now seeing construction and bookings, etc. Nevertheless, this is one stock which has run up a fair bit because of the kind of projects that they are doing in and around their core areas. That's the story with Prestige. One to look out for today. Brigade and Prestige both, I suppose. IRCTC is the other one. Now, IRCTC, I would say, is one of those boats which is rising with the tide. What I mean to say is, while rail stocks, anything rail affiliated has been very, very exciting, IRCTC sort of, I would say, went along for the ride, because a lot of these companies were being rewarded by the street because they were getting orders. They're part of the whole idea of improving the rail network. IRCTC, with the business it does, comes into play when those rail networks are done, when there are trains running on it, and when people sitting inside those trains are ordering their food. So I don't know if this 22% up was justified.
No, and just a quick mention on that, Tamana, if you look at RVNL, Rail Vikas Nigam, those stocks are up 30% in the last 1 month. IRCTC, despite being in the F&O space, actually hasn't participated in the last few weeks. And that could be because the numbers that they've reported are clearly not good. The street might have had a whiff of it or may have not preferred the counter despite the whole sector doing really well. So they've gone up 3% in the month while it's the rest of the sector is up 25 to 30% to say the least.
In the month, correct. I mean, the realization that first you have to make that train. First you have to get the order, then you have to make the train, etc., or whatever is required around it. So anyway, back to the numbers. Revenue is a beat, but EBITDA and profit was a miss as far as IRCTC is concerned. Revenue up 19.7%. EBITDA lower than the Bloomberg estimate by quite a stretch. Margins compressed a bit, down to 31.4 versus 33.6%, and net profit at 1.9%, 284 crores, quite below the Bloomberg estimate. So in terms of segment revenue, the catering business revenue was up 34%. Which is, in line with the kind of passenger revenue you see. State Tirtha revenue fell 28% year on year. And what seems to have impacted margins is catering service and manufacturing expenses, each up 39% year on year. Remember now, this will also be a company whose products will have a sort of cap on the pricing that you can pass on to the final consumer. Whereas we have seen input prices go up across the board. They had a few interesting initiatives through the year, tie-up with, your Swiggy, Zomato kind of things. But in the last 12 months, in fact, they've been up 67%. Investors looking at these numbers are going to wonder whether they're really bringing to the table what was anticipated, and there may be a bit of a question mark there. So IRCTC is one to watch. Aditya Birla Fashion was the other one that we were tracking today. So revenues up 18%. EBITDA is also looking healthy. Margins have improved, but there was a net loss. And my colleague Mahima tells me that this is also because of one-time expenses which have impacted. So Aditya Birla Fashion's net loss has widened on account of increase in finance and tax expenses. Their lifestyle brands have been seeing slow growth, which is just about 2%. That will be a bit of a worry for the street. EBITDA has witnessed a 36% year-on-year growth due to better gross margins and cost management. And just Reebok saw 29% growth. Ethnic business grew very well, 2.7 times. And the e-commerce channel surpassed 100 crores this fiscal year, continuing its strong organic growth. So overall, the numbers are not quite bad on ABFRL. Something you want to add?
No, just that finance cost, interesting that if it's one time, then it's great, but otherwise it's a very large jump in finance costs that add to it. But the good part for Aditya Birla Fashion is also that they gave a guidance for net debt at the end of for FY24, and they have managed to reach that target at least, that the net debt is at the levels which they had guided for. So maybe, just maybe, a small positive. But in the F&O ban starting today, so don't know what quantum of trades will happen. So that's the interesting trading related bit. I don't know if we covered GNFC, but if
not yet.
Okay, because GNFC is out of the F&O ban today, and a howler of a number, so that could be okay. We'll talk about that later when we talk about the numbers. Let me pull out my top three names. I don't have graphics for the first stock, but let's pull up the chart of MTAR Tech. And MTAR had a weak quarter. They've missed the guidance for FY24. They've come in at 581 versus an actual number of 610. They've missed the FY24 EBITDA margin guidance of 24%. The actual number is 19.4. More importantly, they've cut the FY25 revenue growth guidance to 30 to 35% versus 50 to 55% given earlier. They've cut the FY25 EBITDA margin guidance to 21 to 23%, a band, versus 26% given post quarter 3. In one quarter, they've had to cut down the revenue guidance from 50 to 55% to 30 to 35%. This is not good. having missed their FY24 guidance and cutting their revenue guidance for FY25 by such a wide margin, given just 1 quarter earlier, MTAR Tech could well turn out to be a stock that gets hit very badly today. Before we talk about some of the other numbers, a couple of maybe positives from the Aditya Birla stable, and then we'll talk about some other numbers, of course, between the three of us very quickly. But Hindalco and Grasim. Hindalco, Novelis has filed to offer 45 million shares in the US IPO. It's eyeing for about 7.5% equity dilution in Novelis, that is Hindalco. And the higher end of the IPO price and about 4.8 billion of debt, the Novelis EV works out to $17.4 billion. Now, lest this be confusing, what people are saying is that based on this EV, the target price for Hindalco is about 9% higher. Can we see some upside today? I don't know, but watch out for Hindalco.
CLSA has given a target price of 770 with an upside of 13%.
Yeah.
So they have seen the IPO price band and seen Novelis's implied market cap of 10.8 to 12.6 billion dollars, which comes down to proceeds of 810 to 945 million dollars for Hindalco. So that the valuation that they see is 7.7 times to 8.6 times for Novelis, of course, depending on the end of that price band.
Yeah, did you say 19.4 billion EV? $19 billion of EV?
Yes.
Okay. So even that number is different for different brokerages, but it's interesting that Tamanna points out this CLSA number as well. So that's about a 13% upside. A couple of other analysts pointing about a 9-10% upside. But upside there is based on this. So could be interesting.
And just the one thing which I found interesting, just that last bit, is that given no cash requirement of the parent, use of proceeds would be key to watch for. So, that was always the question. It's a bit of a roundabout, but does, one sick child in the family, Vodafone, get something? Or, where does that money actually go?
No longer sick. Ailing but improving, maybe.
Recovering child.
Recovering child. And the third one, really very quickly, and a lot of other stocks, by the way, but the first up is Grasim. Birla Group Holdings has increased stake to 23.18 versus 19%. So watch out for these three. A lot of other numbers, by the way. Guys, anything up?
I think to add to the list of losers, ITI could have it quite rough today.
Numbers.
Very, very bad numbers. The losses widened to 238 crores versus 72 crores. The revenues have declined 22%, and EBITDA loss has risen substantially to 173 from a loss of 6.2 crores. I mean, I think they've got something completely wrong, and that's reflecting in their earnings. Maybe there's an exceptional loss, not sure, but a huge, huge cut on ITI is what you're expecting. PTC Industries, on the other hand, good numbers. It's a small company, it's a micro cap, but of course, they will see a sharp move. Profits are up 60% and revenue is also up 16%. And TCPL Packaging has also seen a jump in profits and revenues for the quarter. Wockhardt, I don't know if we mentioned Wockhardt, but definitely worth a mention on those earnings. Losses narrowed to 177 crores versus a loss of 237 crores. Remember, Wockhardt also has a very large debt on its books. So we will connect with Mr. Koryakewal at some stage to understand what went behind these earnings. Revenues have remained flat. They're up about 3% at 700 crores versus 678. But the EBITDA loss stands at 103 versus an EBITDA profit that the company has seen in the same quarter last year of about 3 crores. So I think Wockhardt may have it pretty disappointing.
Some one-offs as well here, but yes, weak numbers for sure. Just very quickly, MedPlus Health, very strong quarter, watch out for that one. But GNFC, guys, is the other big one to watch out for. Horrible numbers, margins have contracted by 937 basis points. And it's out of the FNO ban. So watch out for this one. Was in the green yesterday. Will certainly be in the red today. So those are a few that we should keep an eye out for. More coming up on the show. But what is also coming up on the show, Alex, is Editor's Cut and a couple of interesting database conversations, I reckon.
So we've said a few things on this particular segment of the show. We've said in the past that history does not necessarily need to repeat itself, but it certainly does rhyme. And the other thing that we've talked about often is buy the rumor, sell the news. So we're going to talk about first what Tamanna makes of the market's reaction to exit polls and what the results have push the market to do, and also how they have matched up to exit polls, the actual results, Tamanna.
Okay, so the thought behind this piece, Alex, which we were working on, and I must say it came from the team, because this was a question. Everyone's talking about June 3rd
Yes.
right now, and from the market's perspective, June 3rd may become even more important than June 4th, because that's when you're going to have the exit poll data, and the markets would probably have a chance to react to it in advance. So we thought we should look at two things. One is what exit polls have said in the last 3 elections. That means we're going back to 2009 versus what the actual results were. So how far off
How
or
accurate
close
are they? Yes.
were they? And the second is how markets have reacted to these two factors. So I'm going to start with 2009, where the day of the exit polls, the Nifty, can we just move that screen a little this way? The day of the exit polls, the Nifty was down 1.25%, but the day of the results, it was 17.7%. If you're wondering why such a sharp change, we will in a second look at the exit polls versus results for 2009. The exit polls were pointing to a hung assembly, which is the worst nightmare for markets, while on the day of the results, it was clear that the UPA would form a government for the second time.
A coalition government. Yeah, I mean,
but
like
it wasn't a hung
weaker,
house.
but a weaker coalition. Still.
Never mind, but at least, versus the exit polls,
Right.
and we'll come to that figure. So that's the celebration. Now, let me come to 2014. 2014 was a very exciting election because it was a real fight. So, the day of the exit polls, when it was becoming clear that, yes, there would be a BJP government coming back after 10 years, led by, Narendra Modi, the Nifty was up 2.5%. The day of the result, when the actual result far exceeded what the exit polls had thought of, the market was up about a percent or so. Now, let me come to 2019. So, second term, remember Pulwama and all of that has happened. The day of the exit polls is showing a return of Modi 2.0 at that time. Market is up about 4%. This is Nifty.
Happy.
We're talking about. And then the day it actually happens, far exceeding the exit polls again, you have a sell on news kind of a situation.
Yeah.
So we just want to set that backdrop. Now let me come to just the second bit of it, which is exit polls versus
the
reality.
Actuals, yes.
Yeah, because so exit polls have been getting better and better at their predictions over time. Because the methodology is improving. Let's just pull that up, guys, in terms of what the exit poll said and what really happened. So this is, say, 2019. Let's start from there. This was broadly what the exit polls were saying. So on an average, I think best case scenario on the upper end, which was a very wide range, was the Maya Axis poll at 365 for the NDA and 108 for the UPA. So now let's see what the actual results were, where most polls just showed the NDA coming at about 300 odd, but you saw them at 353 and the UPA sub 100. So
it came actually the closest, those very aggressive targets. Or not targets, but expectations.
So it didn't actually managed to see what was happening on the ground and the kind of support that a return of the BJP would have.
Yeah.
Now let's come to 2014. I'm saying they underestimated it. So let's come to 2014, where you had a similar case. And 2014, remember, was a bit of a question mark. No one knew if this whole,
wave.
Modi sort of as prime minister idea was going to sit well or not. You could see that hesitation in the exit polls as well. The best case scenario was News 24 at that time seen as an outlier to what everyone else was saying, but most had a sub 300 kind of a figure for the NDA. Let's come to the actual results for 2014. Actual results for 2014, where you saw a very clear government of the BJP and the NDA coming in. I think they're not able to pull up that.
Yeah, so it's taking a little time to load, but then the result essentially was very clear.
Yeah.
And I'm going to read it off the screen. 2014, in fact, the actual number was 336 for the NDA.
Correct.
The BJP themselves won 282.
Yeah.
The UPA only managed 66.
So now what are the takeaways? What are the takeaways of all of this data? And 2009, like I mentioned, they were way off. It said a hung house, and then you had a clear result. It was a UPA government, but the street celebrated because at least we had a clear result. So point number one, the day after the exit polls becomes more crucial than the result day as per the last 3 elections. That's 15 years of impact, because you have the first reason to respond. In 2019, you saw sell-on news because it was clear that this government was coming back. The same, you have policy continuity, and which is why June 3rd, yes, will be possibly more important than June 4th.
The other aspect, and I would think, Neeraj, to bring you in on this conversation as well, the base itself has changed, right? So one might not see as, wide fluctuations for the benchmark Nifty 50. Ultimately, we are at close to 23,000, whereas in 2009, the base was completely different. So perhaps that will also come to play, right?
Yeah, I mean, if the exit polls throw up a very wobbly number, then it might actually matter a lot, because we are trading at highs.
Yeah.
But the one interesting factor one outcome where June 4th will become more important than June 3rd might be if the exit polls throw up a very conservative number and the actual number is way better.
Right.
Like it happened in the state polls, right? If that happens, then June 3rd you might see a very uncertain market, maybe a bit tentative, and then suddenly on June 4th, who knows?
So then must point
You're
out...
saying, so if June 4th throws up a 400
I'm asking,
par, 400 par.
400 par, I don't know, but I'm just saying, because if June 3rd number is way lower and then June 4th is better.
So assuming that the same trend continues where your exit polls are actually conservative, and if you've noticed in the last few elections, all pollsters have started giving ranges and fairly wide ranges. So that, you don't get trolled the next day saying you got it all wrong. So it's becoming trickier to see, but I would presume that you will definitely, like Neeraj said, if you see that, then maybe June 4th becomes a bump up. I don't know about June 5th, 6th and 7th, because correction is due, is what everyone has been saying. When do you take that breather? Okay, the event is done. What was expected happens.
And on that note, yesterday we were talking about the support that domestic flows have given to our equity markets. But Jeffries, in a note, and correct me if I'm wrong in my interpretation, it's saying that you can't really take that for granted. The risk of those flows getting dented is rising, Neeraj.
Yeah, so I'll make this very quick. We're short on time. I'll make this very quick. They've done this breakup very well. 2024, Alex, they break it up into 4 parts. The retail flows, direct retail trading into equities, 8.8 billion. Discretionary flows into MS, which is the lump sum flows at about $5.8 billion. Flows into MS via SIPs, which is the more predictable one, 9.3 billion, the largest of the lot, and flows into the equity component of insurance, etc., etc.
ULIPs, etc.
Yeah, at 6.4, right? So they've broken this up very well. Now, what they say is that the domestic equity flows thus far for calendar year 24 at $7 billion per month run rate. Now, which compared to the base of last year, right? It's 2x the previous high, but 3x YOY. All right. So all the 4 flows put together, because domestic investors apparently are positioning for strong election results. But the point is, the size of the predictable flows, which is point C and point D, which is SIPs and insurance, etc., is about $40 billion per annum, which is a substantial part of the overall savings pie. So the flows are at 20% of financial savings, and predictable flows are actually less than half of that, right? If you look at that. And if the predictable flows are only less than half, and Jeffrey's concern is that if there is some regulatory concern that comes into play, maybe tax on derivatives or what have you, and if the non-predictable flows reverse, which is also a large portion because it's half, right? It is slightly more than half, then there might be an issue for the market.
So we're talking about $4.5 billion per month that could get impacted, basically.
Yeah, give or take, right? But the limited point is that because flows are already elevated and the non-predictable flows are more than half, and if there is maybe a tax on derivatives, maybe capital gains, who knows, right? Whatever comes into play, we'll know only on budget day. But if that happens, then the non-predictable flows gets impacted, and that might have an impact on markets if the FI flows continue to be skittish. So I think the breakup is very interesting, because they've broken it up into the predictable and non-predictable flows, and how the current flows in 2024 are nearly 2x of what happened in last year. So flows are anyways very, very high.
So then another interpretation, and just to close this conversation, another interpretation is that the overall flows that we saw a year ago, the predictable flows are more than that. Because we're 3x of what we were a year ago, right?
From all-time highs, yes. From the year ago, 2x for sure. So that is
2x. Okay,
yes,
so then
2x.
we're still at more or less matching the predictable flows are more or less matching all of the flows that we got at this time last year.
Yeah, and equity flows, just last point, equity flows at $85 billion are already at 20% of financial savings.
Yeah.
We don't have such a high number in India per
Financial
se.
savings of domestic investors?
Yes.
Yeah.
Yeah,
Which
so
is quite
then-
substantial.
Which is very high.
Yeah, so then that needs to keep bumping
It
up.
needs to keep bumping up,
And,
but because
and also, I don't know, it becomes also a function of how markets do, because well people are now becoming more consistent with their financial savings. Markets need to continue to be buoyant for more of that money to come in.
the chicken and the egg, right? People need to continue putting in for the markets to be buoyant. Very interesting chicken
On
and egg.
that note, let us know what you think about the chicken and egg situation and whether you're going to keep your SIP flows going irrespective of what happens on the 4th of June. And by the way, just a quick pointer, because I'm sure that we're talking about F&O after this, we get exit polls over the weekend and we start live coverage from the weekend itself. So I'd encourage you to check out NDTV Profit over the weekend as well.
1st June, 8 p.m.
1st June, 8 p.m. There you go.
Please tune in. We'll be here looking at all of those numbers as they come in, and we'll get you a poll of polls and what it means for trade the next day on 2nd June. Also, we will be telling you what all the top market experts think you should do on the 3rd of June.
On that note, let's slip into a very quick break. We're back on the other side with F&O, so do stay tuned.
Welcome. This is India Market Open. You're watching, the futures and option space and where we are in fact expecting these benchmarks to move around. So let's take stock of that. Now, yesterday was yet another day of trade where we in fact didn't see too much movement on the Nifty, closing marginally in the red, and that has been a little bit of a trend over the course of the last few days, hanging around between the mark of 22,500 and 23,000. That's the kind of range within which we're seeing the Nifty move. And rollovers have picked up to a certain extent at the moment, looking at 46%. June open interest now being further activated, a lot more positions being built there, keeping in mind, I reckon, the outcome of the general elections in the first week of June. As far as the Bank Nifty is concerned, the rollover number looks a tad higher than the Nifty, at around 49%. Now, the Bank Nifty also came off by around 0.3%. And that said, we're still a little bit uncertain with respect to the direction of the Bank Nifty. It does seem like the markets would want to test the 50,000 mark on the Bank Nifty, but that hasn't come to be so far. Coming down to the options market, yesterday was the day where we saw a little bit more call writing coming through, specifically around the 23,000, the 23,100 strikes. And in terms of your overall option open interest, as far as this week's expiry is concerned, we do have a significant amount of writing around the 23,000 calls as well as puts. And moving on, when it comes to the June 6th expiry, not much has changed, except that we have seen more and more call and put writing around the 23,000 strike. On the higher end, we have max OI around 23,500, and on the lower end, we have max OI around the 22,500 put. So that's a rough range within which we can expect the Nifty to move within, at least over the course of the next 1 week. Moving on to the Bank Nifty, and today is the weekly options expiry for the Bank Nifty. This is where 49,500 will be a crucial mark around which we are expecting the Bank Nifty to move. It's expected to be a choppy session, as has been the case over the last few Bank Nifty expiries as well. And remember, we're coming on the back of a very, very quiet Fin Nifty expiry. So where there's a higher chance and a higher likelihood that today we could get some amount of traction coming in terms of sharp moves. Now let's talk about stocks. And we did see some shorts coming into India Cement, Nalco and Godrej Consumer, Bandhan Bank and Info Edge looking at shorts as well. In terms of other stocks which should be on your radar, we have short covering in GNFC, Biocon and Hindustan Copper, Piramal Enterprises and Vodafone Idea looking at long and winding coming through. Now, these are just some of the stocks that we can watch out for. But what can we expect going in, and what sort of trade that can we expect? Well, we have Avni Bhatt of GM Financial who's joining us on the show. Avni, good morning. Thank you so much for joining in. Let's start with the first stock on your radar. I believe you have a spread that you're playing out with. Can you take us through your expectations on that stock, as well as the rationale behind which you are deploying this option structure here?
Good morning, Agam, and a very good morning to all the viewers as well. The first stock is HDFC Life. Now, we've seen a breakout of the congestion zone of 570 to 572 after almost 10 days of consolidation on the stock. And it has crossed and closed above the highs of last 3 weeks. So, and a bullish piercing candlestick pattern has been formed on both the daily and the weekly charts, hinting at continuation of this uptrend. So, if you look at the targets of this particular breakout, then it is placed at around 609, and if even that level is crossed, it may move up to as high as 622. Also on the derivatives parameters, combined futures open interest for May and June together has seen an open interest addition of 2.5% on the long side. So buying interest is picking up in June series call options of 580 and 600 strikes. So the stock is poised to move past 600 zone in a very short term, and the support base has been formed at 560. So we suggest going for a bull call spread in this particular stock, with the buying of 580 call at around 23 and selling of 600 call at 16 rupees. So the target for this particular strategy will be around rupees 12,000, and you can keep a stop loss of 6,500 in case if there is any decline in the stock although it may not be hit immediately, but there might be some kind of jitteriness before it starts moving up again.
Right, and so of course the advantage of playing a bull call spread is that you have a limited downside while you also have a limited upside. But of course, provided that your risk-reward ratio is favorable, that is your reward or your expected return is higher than what you stand to lose. And in this case, of course, Avni is mentioning 6,500 on the lower end. That's the most amount that you should ideally lose, and no more than that on a per lot basis. Well, that's the strategy that you are playing out for. Am I correct, Avni?
Yes, absolutely, Agam.
Right. Avni, can we move on to the next one? And next one is Hindustan Unilever. Can you take us through your rationale here as well?
Yes, so Hindustan Unilever, in the first place, the entire FMCG sector, after a very long consolidation, has started showing green shoots in the offing. So, on 7th of May, we had seen a very strong breakout and a up move. And post that, the stock has been consolidating for last 2 weeks, taking support near the short-term moving averages on every decline. So these short-term moving averages have not been breached after that particular strong up move on the 7th of May. Now, yesterday, the stock has moved above the highs of last 2 days and closed above the resistance of 2380. So a long addition has been seen in futures. Delivery volumes have picked up, and it has increased by nearly 40%. So a good buying interest is picking up at 2400, 2440 and 2500 calls for the June series. So it's HUL is a very well-placed stock to see a potential up move up to around 2460 in a short time, and eventually 2500 by probably June end. So to play out this move, since the momentum is very strong, we recommend a vanilla call option for June series. One can take an entry in 2440 call option at around 45 rupees. Now today, since markets may open with a gap down and we may see some profit booking in the early hours, I suggest that one should enter into this call option only once it crosses 45. And target for this particular option will be 85 rupees. And on the downside, one can keep a stop loss of 25 rupees.
Okay. Avni, just a follow-up question, because we have a lot of viewers who are very new to option markets. For HDFC Life as well as HUL, you have a positive call, we have a positive stance. But when you are playing a bull call spread on HDFC Life, you have a vanilla call buy on HUL. Can you tell us the difference as to why you are choosing two different option structures when you are positive on both these, and when you in fact have a limited downside on both these options plays?
So it's the pace of move that is the difference between the two stocks. HDFC Life may take a little while to start moving up again, whereas HUL is in a very strong momentum. Now, if you consider the time value depreciation factor, if you are into a vanilla call option, the momentum has to be really strong, and from the point of entry, the stock has to move up immediately. So that kind of momentum is seen in HUL. That's why we are going for a vanilla call option. While HDFC Life may take some time, probably in by next week, it should start resuming the uptrend on a very strong basis. Till then, to avoid any kind of time value depreciation on a vanilla call option, we are protecting that particular factor by selling a higher call on it.
So there you have it. You're actually protecting yourself from a significant theta decay when you are actually deploying a bull call spread, which is the case for HDFC Life. And of course, as Avni has said, that she's expecting a little bit more sharper moves as far as Hindustan Unilever is concerned, which also gives you an advantage that's around the time you don't see too much theta decay, especially if it happens very earlier on in the series where the theta component is significantly lower. Well, on that note, Avni, taking a moment to thank you for joining us and explaining those strategies to us, as well as, of course, giving us those option structures that we can deploy on those two stocks. With that, it's back to you, Samina.
Thank you, Agam. That's, of course, strategies coming in for today's day of trade. HUL and HDFC Life, of course, Avani constructive on both those counts. A quick check on implied Nifty before we move on to other stocks to watch out for in trade today. Implied Nifty is indicating to a flat start, I'd imagine. Oof, that looks like a tough start, actually. 122-point cut on implied Nifty is what we are gearing up for. Remember, global cues are not very positive. Apart from the Nasdaq in China in early trade this morning, most Asian markets are really sulking. Well, let's go across to Richa now, who's got a whole list of other stocks that will be in focus this morning. Richa, over to you.
Thanks, Meena. Good morning. First on my list I have is Amara Raja Energy. The company reported strong fourth quarter. Revenue was up around 19.5%, while profit jumped around 62%. While this was on the back of strong demand for its batteries from the automobile companies. Also, the industrial business segment grew on the back of expansion of 5G networks. Now, this is largely because the company also supplies the batteries to the telecom players, and the telecom players are on spree to expand its 5G network. The margins were marginally down by 40 basis points. Now, this was because the inventory purchases rose by nearly 130%, which is not a major concern for margins, but which might likely have a support for the revenue expansion in the coming quarters. Next is MedPlus Health. This company also reported a strong fourth quarter. Revenue was also up around 19%, while margins were largely flat, maybe up around 50 basis points, and a 26% increase in profits. Now, revenue from retail business, which constitutes around 98% of the overall revenue, jumped more than 18%, while the revenue from diagnostic business surged around 95% for the company. The expenses rose around 18%, but this was mainly due to higher procurement cost of medicines that the company sells. Last on my list, I have Mahindra & Mahindra Finance. Now, the company has approved issuance of bond on a private placement basis for up to 2,000 crore with a green shoe option of 500 crore. The bond is proposed to be listed in the wholesale debt market of BSE with a fixed coupon offered of around 8.18%. The original tenure for the bond is 5 years, but the bond holders also have a right to exercise the put option at the end of 1 year and 111 days.
Thank you, Richa. Lots of stocks that we'll be tracking in today's day of trade, largely coming from the earnings stable. Remember, it's going to be earnings heavy week today as well. So watch out for lots that will be flowing through the day as the day progresses. It looks like a tough start, like we said. Sudeep Shah, Deputy VP and Head Tech Derivative Research of SBI Cap Securities, and Mayuresh Joshi both join in. Sudeep, I'll start with you on the charts. Yesterday was tough. The last 3 days, we've seen very peculiar nature of the markets. It's opened up flat, traded higher during midday trade, and towards the last hour, profit taking has emerged. And that's consistently happened over the last 3 days. Today being the aberration that you're expecting a gap down in trade. How would you play the index with the elevated VIX, with GDP data tomorrow, monthly expiry, and of course the big event next week?
Good morning. What we feel is, what has happened in the last few days is the last 3 days, what we have seen is once we've seen Nifty touching 23,100, testing that higher levels, and post that yesterday and day before yesterday, what we have seen is that markets have gone into a shell. We have seen individual pockets where there have been extensive profit booking also in case of mid caps, and that is quite on expected lines now ahead of all these important events that are lined up, and in the run up to the election results as well as the exit poll numbers that are due in the weekend. So from now on, I feel the action would be tepid. We may today, as we are expecting the GIFT Nifty to open negative, it would be opening somewhere closer to 22,800. Post that, the support zone will be between 22,730 and 22,750 zone, where the 10-day exponential moving average also is placed. And as well as if you see, there were a couple of swing highs in April month, which were closer to 22,750, 22,770 zone. So I guess these numbers would be really important today. 22,730, between 22,730 and 22,770 would be the key support zone that I would be watching out for the session. As well as if you see Bank Nifty now, Bank Nifty after 3 consecutive days of higher top, higher bottom, made an inside bar yesterday, and that is very close to its prior resistance of 49,500. So I feel now it is important that Bank Nifty crosses and sustains above 49,400, 49,500 mark for a sustained up move. Else, there is a case of a mean reversion towards its 10-day exponential moving average, which is closer to 48,500, 48,700 zone. So a dip towards 48,700 is what I'm expecting in case of Bank Nifty, and then might be some consolidation, and then we go into the event. So my take would be to reduce the leverage positions as well as only concentrate on stocks that are good quality and which one could carry going into the event also.
Okay. In light of this, Sudeep, what are the ideas for the day? Do you have only one, and is that because of the heightened volatility?
Yeah, absolutely. So I would prefer to keep less positions going into the event. And that is the reason one stock which I've liked and where there was a clean breakout yesterday despite all the mid-cap profit booking, that is HDFC AMC. Now, HDFC AMC, if we see from 30th of October 2023, the stock had started moving from 2750 to almost it touched 4060 levels. Post then, since February end, it has slid into a period of consolidation. And yesterday we have seen a downward sloping trend line breakout. So I feel from the current levels, HDFC AMC could be a decent bet from a medium term perspective also, and can be bought with a stop loss of 3930 on the downside and 4150 targets on the upside.
Mayuresh, good morning. It's looking like a bit of a tough start to the day, but then let's get specific on some of the news makers and what will be on focus. I want to start with Hindalco and how you see it after some details are now out in the open of what Novelis's valuation could be, what the flow through then is for the parent, etc. Do you see this as a stock which has more steam left, considering Hindalco has had a fairly good run up already?
Morning, Tamanna. Our belief is yes, based on two factors. Obviously, I think the finer details which have come through for Novelis are encouraging, and kind of expectations in terms of business traction that Novelis can deliver over the next few quarters and years can sustain. So to that aspect, the expectations in terms of Novelis contributing to the overall SOTP valuations remain justified. On the standalone business, the expectations in terms of aluminium as an end user case for electric mobility platforms, batteries, the car itself, and multiple uses otherwise, will mean that as demand comes back, specifically from China, aluminium prices which have hit a low of $2,100 per ton should start going higher. Now, integrated players like Hindalco, which have an access to alumina mines, which have access to bauxite mines, where the production ramp up will happen over the next few quarters, will help it sustain the input cost inflation as and when it happens, as restocking starts taking place and demand comes back very, very strongly. So to that extent, the domestic volume business, along with the expectations in terms of stability margins, is something that you can look forward for. Yes, the stock has moved up in the last few weeks, but in our opinion, both the PSRS rating look extremely strong, as does the institution holding for Hindalco. So anybody holding on to Hindalco should continue.
Sudeep, you want to come in on Hindalco on the charts? What is this one looking like?
Yeah, see, Hindalco, if you see last 4 or 5 sessions, the stock has approached 695, 698. However, it could not sustain at higher levels. And what we feel is overall now the zone of 666, 660 and 668, this band would act as a strong support on the downside, being 10 and 20-day exponential moving average. And right from the time it has started moving up from 550 levels in late March, the stock has never significantly breached its 10 and 20-day exponential moving average and closed below that. So I feel once again this zone of 660, 665 would act as a strong support, and dips to that zone can be used to accumulate the stock from a medium-term perspective.
All right, time for a very short break. Hindalco, just one of the many stocks that we're talking about this morning. We're back with pre-open rates. Let's see if that pre-open is as harsh as the implied open has indicated. All that and more when we return. Welcome back. Pre-open rates will hit in just about 30 odd seconds. But meanwhile, let's get a sense of what kind of a day we're going to have. Sudeep, just a few stocks that are on the radar. We're at the, I would say, tail end of the result season, but a lot of companies now announcing numbers, few that are on top of mind. And I wanted to know what you're seeing on the charts in terms of these. IRCTC, MedPlus, and Brigade. If any of these you've been tracking, and what would you do with them?
Yeah, Tamanna. See, all these stocks, IRCTC, Brigade, MedPlus, they've all seen a decent rise in the last 1 month. But yesterday, from higher levels, or in the last 2 days, cumulatively, there have been some profit booking visible in these names. So I feel the overall trend, even in case if we say Brigade, now Brigade from the current levels also could retest somewhere between 1150, 1180 zone, and that could be a good zone to accumulate that stock on dips, because the stock from 1000 zone on 14th May has moved to 1300, and almost the 50% retracement somewhere comes around 1150 odd mark. So I feel 1150, 1170 zone on dips would be a good entry point for Brigade. Now, if you see IRCTC also, similarly here also post a move from 980 up to 1130, the stock has retraced around 38%, and on the lower end now 1050, 1060, which is the prior swing highs of the month of April also, as well as the 20-day exponential moving average also is placed there. So I feel this zone of 1050 would act as a key support on the downside for IRCTC.
IRCTC up this morning in pre-open trade, so is Brigade, but look at Hindalco. And again, with the standard caveat that this is the pre-open session, but at 10% up on Hindalco, even as the indices are now a bit stable after that first sort of downward sweep. What else is looking interesting this morning or reacting in a major way? Just JSW Steel down, Power Grid down. Axis, M&M continue, a bit of weakness over there. But on the upside, Adani Ports doing well, HDFC Bank, ITC doing decently, just in that first set of sort of, cues that you're seeing. Mayuresh, let me come to you on, terms of how big a factor do you think for the next couple of sessions results are going to be, corporate numbers are going to be, or is everyone sort of securing themselves for what positions to take between 3rd and 4th of June? Is that the big story? And some trepidation while you see Bank Nifty and Nifty expiry over the next couple of days?
Oh yes, Taman, I think absolutely. It's a combination of all these factors, and markets do become jittery as they head into the election outcome. We've seen that in the past as well. But I think they will normalize themselves once the elections are out, and they look forward for the next event, which might be the budget in July. What kind of announcements will be made in budget, what is the 100-day program, how is that getting implemented, so on and so forth. So I think markets will take all these things by strides. As far as corporate earnings are concerned, almost at the fag end, and corporate earnings have been decent enough for most sectors. Obviously, you've seen a few misses for a few large caps, but that is very well understood. But the large part of expectations that is getting built up is that there should be a reasonable amount of a 12 to 14% annualized growth on a compounded basis over the next 2 years, which probably means that if companies are able to deliver, specifically the domestic oriented ones, markets and the flows that we are probably experiencing, a structural downside risk looks very, very limited to that extent. So yeah, I think volatility till the election outcome, very well expected, that is presumed by the markets. But I think good quality stocks which are domestic focused should still be on your radar.
I'll take a cue from that and talk to you about PSU stocks that for the first time yesterday saw some selling pressure. So stocks from the railway pack, defensive pack that have been on a one-way journey, and earnings for most of them have kept up with the kind of stock performance we've seen, some may argue. Do you feel like the current weakness, maybe in a BDL, an HAL, a Cochin Shipyard, Mazgaon Docks, Garden Reach, is an opportunity to load up on these stocks currently? Because we've not seen weakness for the last 3 to 4 weeks, if not longer.
Morning, Samir, $1 million question. And when we say that you need to be patient for a good decline, whatever decline comes gets gobbled up very, very quickly. I think the structural story and the structural tailwinds for this sector remain intact. Very strong order books. They're sitting on order books, which gives them revenue visibility over the next 4 to 5 years. The margins at which these orders are coming are decent as well. And so far, they've been executing well. So I think numbers are a testimony in terms of the exploded valuations that these stocks are trading at. My only risk is if they are not able to execute for a quarter or two in the next few quarters, I think the markets might derate these stocks very, very badly. So to that extent, anybody holding it from lower levels should continue holding, albeit keep on tracking how the performance is happening on a quarterly basis. Fresh investments, I think these marginal declines won't help. Valuations are too steep and they're trading way above pivot levels as we see it. So I think it's $1 million question. Steep declines, whether they come or not, time will tell.
And you can't even stay on the sidelines because then you're going to feel even worse about missing out on the rally. Actually, Mayuresh, help us answer that. And we were discussing this in the morning, right? Asset allocation probably has changed for a lot of investors simply because equities have risen quite sharply, or at least fund performance on equity side is done well. Debt on the other side has been on a slow burn. From where we stand right now, if investors are looking to make exits across their broader market fund portfolio, would you recommend a neutral, market neutral strategy, or would you say exit the broader markets and re-enter the large cap space in a staggered manner? How would you play that dynamic?
Again, I think it's a very dynamic question. It really depends on the risk reward of investors. So any aggressive investor will probably still feel that the broader markets is something where the outperformance comes from. And that has obviously been seen over a longer period of time. An investor who's probably more satisfied in terms of a stable kind of returns into the markets, a more balanced approach is warranted. So if you've got a high skew towards mid caps and you are expecting a balanced sort of returns, being a balanced investor, you should rebalance towards large cap stocks as well. And for more safe haven investors, someone who looks at margin of safety, large caps do offer a huge margin of safety at this point of time. So I think which bracket you probably fall into, you probably need to skew your asset allocation accordingly. But even within the broader markets, I mean, I think there are still pockets which will still look reasonable enough. You've got, as I said, PSU banks as an example, a few of the domestic infrastructure, construction-related stocks, a few of the PSU banks, where valuations are not too steep.
Well, that's the view, at least on some of the key movers. By the way, we'll watch out for the likes of GNFC, MTAR Tech, ITI, and a few others, because the pre-open rates aren't suggesting a very positive rate thus far. A couple of minutes left, of course, but ITI 2 down about 3-4%, MTAR 15%. Just looking very, very wobbly. Nevertheless, a slew of brokerage notes in focus today. Harsh Johnson with some of the key ones. Harsh, good morning.
Good morning, Neeraj. First off, on LIC, we've got a slew of notes. The ones which, in fact, have maintained, pretty much all have maintained their stance across analyst categories. But what you're seeing is a slight inch up, if at all, in terms of target price, except Citi. Citi has actually reduced their target price from 1295 to 1255, and that's why this note really stands out. First off, all positive commentary. They've spoken about how the business mix is shifting towards non-par, which is a positive. The momentum is largely driven by individual savings, is what they identify. In terms of the non-par mix, they are expecting the non-par mix to go up from 18.3% currently to 30% by FY27 for LIC. This could be big because margins could also go up. But they believe that margin uptrend will be on a slightly more tapered trajectory. They are expecting margins to compress in the non-par business from 61% currently to 45% by FY27. And that contraction would probably also impact the numbers and profitability. In terms of margin compression, they are expecting individual non-par to face some amount of headwind with regard to competitive price pressure, but nonetheless they are expecting a 24% upside from here as well on LIC. So keep your eye out on that one. The other one is on Hindalco. Of course, again, event based you've got Novelis, having their IPO. They're expecting, of course, a good valuation coming from Novelis, but what they are suggesting, CLSA, is that three things, and I'll try to cover this. One is that the valuation is pretty much at the midpoint when it comes to valuing other peers. Second is the free float typically will distort the valuation for Novelis, and therefore may not be the best benchmark in terms of valuing Novelis. Very similar to the way Vedanta and Hindustan Zinc are valued. And third is that given that the cash is going to be used entirely by Novelis, very little benefit there for Hindalco per se. And therefore, how they use the cash will be the key in terms of the value unlocking there. They've given it a multiple of 6.5 times, which is Novelis, 6.5 times EV EBITDA, and they've maintained their buy call on Hindalco, 770 being the target price, nearly a 15% odd upside from here.
Okay, well, certainly seems like Hindalco is starting off on a positive note at the end of this pre-open session. Harsh, thanks so much for putting that into perspective. Sudeep, come in on this one. While choppy, but the last 3 or 4 days, Hindalco has had a decent build-up, independent of what's happening to aluminum and other commodities per se. Currently also up about 2% higher. If you had a long here, would you square the long or would you stay long in Hindalco?
Neeraj, what I feel is that Hindalco is in a decent structural uptrend, and although there have been some wobbly days and the stock in between after a up move starts consolidating, but that's the nature of the stock. And what I feel is from now on, anyone who is holding this position should hold it with a 665 as a trailing stop loss on the downside, which is a 10-day moving average. From a trading perspective, from an investor standpoint, the stock is good to hold from medium to long-term perspective. So should not worry too much about the election outcome, because if the story is intact, if the results are being delivered, then I feel the stock could be held from a medium to long-term perspective. But for traders, yes, 665 for me on the downside would act as a trailing stop loss. Whoever is holding the positions, at least from lower levels since the past few weeks.
We're seeing a bit of a pullback, at least as far as pre-open rates are concerned, on some of your PSU stocks. IRCTC, for obvious numbers, and we discussed their results in some detail in the opening trade. So it's closed the pre-open session about 3.5% down. But even in REC, PFC, NTPC, all of these stocks, which over the last several weeks, experts, analysts have been coming on the channel and saying that buy on dips. I want to ask, and let me come to Sudeep first, whether this is the dip or there is more to come. Are you seeing, anything that you would touch over here, or you would wait for sort of the dust to clear in the next few sessions?
So that is a fantastic question. Now, buy the dip. So what has happened is in terms of these names, when you say about all these CPSE and PSU names, now these names have really moved up big time in the last 1.5 months, despite some consolidation between March and April. So what I feel is from the current levels, one should not be now too aggressively positioned in these names. Wait for the election outcome, wait for the market volatility to settle down. And we all know that given the outlook towards the power sector, the REC, PFC, or power financing, including that space. So REC, PFC, NTPC, all these names are really good from a medium to long-term perspective. But yes, from a short-term volatility perspective, one should just be a bit cautious. Build positions in a staggered manner and not from an over-leveraged perspective.
Okay. Mayuresh, amongst the top losers at the start of the trading day seems to be MTAR Tech. They've cut the guidance as well. We have about 1.5 minutes left, Mayuresh, so slightly quickly. Do you study this one? Have you looked at this one?
Morning, Neeraj. I think space technology, the experience that they probably have within that space itself and the products that they probably have are unique. But I think numbers are not coming through for some reason or the other. So yeah, I think I'll wait out on this one.
MTAR is an avoid. Mayuresh, keen to know your take on Brigade and Prestige. Both came out with numbers. And the conversation we were having earlier of how do you really view numbers of real estate companies that peg everything to pre-sales values? I wanted to know how you think of it.
So yeah, I think and the sales velocity is ramping up, Taman. I think projects getting introduced and projects getting sold off. But ultimately, I think the proof of the pudding is how cash flows are going to come through, because with the accounting changes that have probably happened, the recognition only happens at a certain stage. And as that recognition happens, cash flows become very, very important for these players. Obviously, all these players are going through a huge real estate boom, as we are seeing. Pre-sales velocity are at the peak. The expectations in terms of the old inventory that they're probably carrying is getting sold off as well. Leverage is coming off, and to that extent, I think they're enjoying every bit of the boom that the real estate cycle is offering. So yeah, I think the momentum might very well continue for these players.
Okay, 20 seconds left for the markets to kickstart trade. Remember, we'll have a start which is sluggish, and therefore that shouldn't surprise too many people. The only point is, can we form a near-term bottom of sorts out there, or will we continue to do further damage today, is the one key question. Second eye will be on VIX and India VIX, and what does it do. We'll try and mark it on open as well, of course, but here are the first rates this morning. About 100 odd points, so in line with what the implied open was suggesting, I reckon. Maybe a bit better than that, but let's see if it succumbs to some pressure. Banks participating on almost the same vein. Remember, yesterday PSU banks were the top losers. Mid caps down 0.4%. Small cap index, which was down about 1.3%, should come up on your screen next. That one is down about 0.5% as well. Sedate not quite cracking, at least for now. Pull up the heat map, and Hindalco will be at one end. The question is how much of green and how much red. Lot of red, very little green. Hindalco too, not really great, just about 0.76%. But again, if you see, with a Sun Pharma, a Nestle, a Dr. Reddy's, a very defensive bent. What's losing out? Mahindra and Mahindra, 1.5%. No news, I reckon. It's just the market being off, pulling down a clutch of stocks. BPCL 1.3, Tech Mahindra, SBI Life. It's all over the place, really. There is no clear winner or loser per se. No news-based movements either out here. But for the fact that OMCs may be a bit soft because of rising crude prices. So crude prices have gone up. So that might be one. And just before I hand it over to Tamanna, wonder if we can pull up the India VIX and see what it's doing, because yesterday it had gone up quite a bit. About 4-5% higher was India VIX yesterday. Wonder if VIX has picked up. No, for now, quiet. This might not be too bad.
On India VIX, I'm remembering one quote from one of our guests a few weeks ago saying, unless it hits 28, I don't really care. But in the last couple of days, we'll wait and see what happens to India VIX. Let's pull up the mid-cap and small-cap indices and see what broader markets are doing. Also in pain this morning, about 0.5% down on the mid-cap 150. Small-cap index also over 0.5% down. So this is a bit of a painful morning in that sense. What's working, what's popping, what's not? Let's pull that up. Paytm on top of that list. They've denied rumors of a possible stake sale. Nevertheless, that stock at a 5% circuit right now, because any kind of hint of a positive news, whether it goes through or not, or whether there is any reality to it, we'll see an upside on Paytm. So 197 Communications up 5% this morning. ABFRL was the other one we wanted to talk about. So their numbers are out. The high finance costs have hit their profits at the end of it, but it's something that the street doesn't seem too comfortable with. Brigade and Prestige was the other one that I wanted to pull up. Both real estate companies, both hot favorites off the street, and have had numbers out. Brigade cooling off from its pre-open kind of an up move, but still doing well on a otherwise quite tepid day, so about 3.5% up. Let me pull up Prestige. Prestige also in the positive, though Prestige profitability was hit this quarter. IRCTC is the other one that we wanted to talk about. So results have been a disappointment for a stock that has run up quite frantically, about 3.5-4% down. Remember, their high costs have hit profitability and margins on this side. So EBITDA has definitely been a miss. GNFC is the other one that could be reacting, and yeah, it is about 2.5% down. Again, results, margins have been squeezed quite actively. ITI was and MedPlus Health is the other two I'll pick up. And all of these are result reactions really you're seeing. So ITI, described by Neeraj at the start of this show as horrible quote-unquote results. So horrible impact as well, about 3% down. Actually not horrible considering all things. But MedPlus Health is the other one that we should talk about. But the numbers actually seemed okay, but it's seeing some profit booking about 0.5% down right now. So those were some of the movers that I could spot, Samina, but nothing too much happening in trade, in opening trade today. Everyone's waiting and watching.
22,800 on the Nifty and sub 49,000 on Bank Nifty. So both those verticals are clearly seeing selling pressure. Remember, at the start of this week, the line of sight was 50,000 on Bank Nifty, and now we're sub 49,000. So that's the selling that's actually emerged for the banking names over the last few days of trade. Bank Nifty as well, from 23,000, it's gone all the way down, sub 22,800 now on the Nifty. So it's not looking great. The breadth of the market's also weak, and the broader markets are declining. The mid-cap index is down 0.6%, so underperformance coming in the broader markets as we see it. In the broader market, the stock of the morning on the sell side has got to be PNB. If we can quickly get that stock up to get a sense of whether or not there's any sort of a deal that's taken place. PNB Housing is down 8%. If I can get PNB Housing is what I'm referring. 7.5% cut coming in on this one. There were some reports from agencies that there could be a stake sale on the counter by two investors. Now, whether that block deal has taken place, we'll confirm that with you shortly. But for now, the stock is down 8% in trade. The rest of them that we're seeing selling, I want to quickly pull up BDL, HAL, Cochin Shipyard, Mazgaon Docks, because they've represented the buying that the markets have seen in the PSU pack over the last couple of weeks ahead of the election outcome. Another weak morning, there's a very, very clear negative bias. BEL is down 1%. BDL, Cochin Shipyard is down 3%. Bharat Dynamics is down 2% after a 6% fall yesterday. And Mazgaon Docks trades with a slight lower bias. While on the sell side, MTR was looking very bad. Brigade started off quiet but is building on its gains, and I think that's what the street will want to take heart from. And MTR is off the day's low point. So Brigade is at its day's high, MTR is off the day's low as we see it in trade. Amara Raja Batteries, those numbers didn't look too bad. I don't know why the market doesn't seem too happy about it. The stock is actually down 4% in trade. You've also got a few more companies that I'll quickly run through in terms of earnings reaction. Aster DM Healthcare, if you can pull that one up, numbers were not good. The stock should be seeing a negative reaction in trade as we see it, 3% cut on the one. Dynamatic Technologies, it's a small company but worth a mention. Earnings have looked pretty good. The stock is still down 6% in trade. Engineers India, profits were weak. ITI as well, numbers were weak. Both those counters clearly seeing a negative trade this morning. EPAC Durable and PTC Industries. EPAC reported weak numbers. PTC Industries reported good numbers. EPAC down 5%. PTC down. Should be seeing an upward journey, but I'm still waiting on it, trading flat. So no reaction coming in on good earnings as well this morning. Walk hard, if we can pull that one up, we should get a sense of how the market is viewing those earnings. 1% high on walk hard. So clearly there's more to it than just the frontline numbers for them. RR Cable, that stock's been on a roll in the last couple of days. They've had good numbers too, trading flat to slightly higher. So usually when the companies react or report good earnings, we do see a good sharp reaction. But this morning, at best, the street is getting a flat reaction to good earnings and a bad reaction to weak earnings. Just going to show the kind of sentiment.
PNB Housing, I wanted to add on PNB Housing Finances that is reacting as expected this morning, because you had a stake sale. Two foreign funds are pairing their stake in PNB Housing Finance. That's Asia Opportunities Mauritius and General Atlantic Singapore, and at a discount, the floor price at 717 rupees. So you're already seeing quite a sharp reaction there. BNP Paribas India and UBS Securities are managing that deal. It's a 500 crore rupee deal size. So that's one of the reasons perhaps you're seeing PNB Housing hit. But just quickly to get Sudeep's view after the first opening trades are seen. Sudeep, anything interesting that you're spotting in this market? And I'll reiterate the question I asked you after the pre-open session, because that entire PSU pack seems the most hit. Anything you'd pick up right now?
Except to see a stock like, say, HAL or Mazgaon Dock, where we are seeing some initial signs of the downward momentum getting capped, at least for the first 10 minutes or so. So I guess there is some bit of buying which is visible there. But there too, I feel for a stock like HAL, one needs to see that the stock sustains above 5060, 5070 for it to at least build on the momentum throughout the day. So 5060 on HL will be very important level to watch out for. If the stock moves beyond 5060, then we could get a short-term move up to 5140, 5170 on the upside.
Right, that's HAL trading flat to slightly higher is what we're seeing in trade. Just a quick one on Bank Nifty, Sudeep. We were talking about 50,000 in the early part of this week, and it's only Wednesday, and we're sub 49,000 now on Bank Nifty. Room to initiate a fresh long, sub 49,000 on Bank Nifty?
See, I feel Bank Nifty is right now in a mid zone actually. If the support zones are closer to 48,600, 48,500, whether 10 as well as 20-day exponential moving averages are present. Generally, these averages really work well with Bank Nifty. So, the generic and post that big move in the last week from 48,500 all the way up to 49,700. I feel some retracement and retest of 48,600, 650 zone is likely, and post that there could be a rebound from those levels. But at least I feel there could be a retest from the current levels, and we could slowly, as we head up into the exit poll numbers in the next few days, we could slowly grind lower and then rebound from those levels.
Well, while Brigade is up 8% now and trading at the highest point of the day, NBCC is up another 4.5%, and yesterday's key result boy, Sumitomo Chemicals, which was up 3%, not terrifically, but up another 4.5% in today's session. So that's to be watched. By the way, real estate seems to have turned today. Brigade, Suntech, Prestige, the list is looking okay. A clutch of other mid-sized names too have given some very strong updates. Mayuresh, I was looking at the TARC, which is the split from Anantraj, also giving some fairly strong updates yesterday. Anything from this mid-sized, small-sized real estate pack that looks interesting to you?
So I think one of the stocks that can be kept on the radar is Arvind Smart Spaces, Neeraj. They are doing a phenomenal job as far as the markets in Gujarat are concerned. And the kind of numbers that they probably reported are a testimony that the kind of pre-sales velocity that we are probably seeing, the new launches that they've probably introduced and announced are picking up very well. And the management sounds very, very optimistic in terms of delivery as well. So again, coming back to how the real estate cycles work, if the cycle is in their favor, the expectations in terms of all key variables, including new launches, existing inventory, very much in their favor as well. And therefore, I think numbers should keep on coming through, specifically the cash flows, which is a very, very important and integral portion in terms of accounting for real estate companies. So if you have to choose, pick and choose something or keep on our watch list as what we are doing at Markets with, I think Arvind Smart Spaces is something that one should keep.
Defensives have been seeing a little bit of action. So pharma has had a good run for the last couple of days. Even on a morning like today when Wockhart's reporting wasn't outstanding, the stock is outperforming the markets, which makes me believe that maybe, just maybe, it's time to go out and buy consumption in pharmaceutical stocks. Would you agree? And if yes, do you have anything that you like in this pack that one could accumulate on in the current juncture?
So it is an interesting space. It also is a defensive space, Amina, and there has been interest which is built up over the last few quarters. Having said that, the expectations in terms of numbers, Divi's came out with a decent set of numbers. Glenmark, the guidance was very, very good, and the expectations in terms of more key NC launches that can come through can create that differential factor that one is really seeking in terms of what Glenmark can deliver, as analysts are pegging it through as well. What we continue holding in our list is Strides Pharma. Again, good set of numbers. Expectations in terms of their core portfolio is expected to go at a very, very decent pace. Their key markets, specifically the branded generics, pricing should not be an issue, and therefore margins should hold up pretty well. And therefore, I think picking and choosing Strides Pharma is an actionable at this point in time. Good EPS, RS, good distribution holding, meets most parameters of cancer financial year. And we continue holding stocks like a Cipla, a Dr. Reddy's into our global portfolios as a clear disclaimer.
Right, that's time for a quick break on the show this morning. Thank you so much, Mayuresh and Sudeep. Great to have you on. After the break, we'll be talking with Max Estates COO Rishi Raj about the company's growth outlook going forward. A lot more coming up. Stay tuned.
Back with India Market Open right here on NDTV Profit. We spoke about how some of these North-based real estate firms have given some very strong guidance for FY25. It started with a guidance given by Signature Global. Yesterday we saw TARC give a very strong number. In between that, we've seen Max Estates about 4 or 5 days ago come in and speak about some very strong growth numbers for FY25 or FY24. Rishi Raj, CEO of the company, joins in to talk about this and some very interesting transactions that they've done with their anchor investor, New York Life as well. Rishi, great having you. Thanks for taking the time out. Just wanted some clarity around the sales volumes that you talk about versus the reported numbers as they come on the exchanges, because those look, there seems to be a bit of a disconnect between what you portray in your presentation in terms of sales volumes and the reported numbers. So can you just tell us how has FY24 as a year been in terms of reported numbers and what is the way ahead?
Thank you, Neeraj. So when you look at any real estate company, particularly a company like Max Estate, which has been in the business for last 6 to 8 years, reported numbers may not tell you the entire story. But starting with the reported numbers, reported numbers, if I look at the top line for FY24, if I look at pure rental income, FY24 was at 68 crores. And that number is expected to go up to 120 crores as far as annuity rental income is concerned, which will continue to grow from here. But I think the key is when you look at the residential side of the business, FY24 really marked our entry in residential in Delhi NCR. We successfully launched our first residential estate 128 in Noida, where we made a booking of 1,800 crores at unprecedented price of 18,000 rupees per square foot. Now, these numbers will be translated into P&L only at the time of the possession, which is 4 years later. So you may not see this yet in the top line, but this clearly is reflected in your cash flow for the company basis the payment plan and collection of the company.
So Rishi, tell us what is the plan for the next 3 years, let's say, because one way to look at it is that 3 years out, the numbers will look very large, but what happens until then? Because like you said, I mean, when I look at the guidance that you've given in terms of sales booking, you've guided to 4,000 crores in FY25 versus 1,800 crores. But for an average viewer, they see a PBT loss and they're trying to figure out, in Q4 that is, and they're trying to figure out what is it that that the company actually will do and how will it show in terms of reported numbers as well? How would the company get valued? So give us some guidance there. Right.
So let me divide the response in 3 parts, Neeraj. First of all, just to educate all your investors and the audience, Max Estates today has a portfolio of 12 million square foot. Just to double click, 4 to 4.5 million square foot is commercial real estate, of which around 2 million is delivered and rest is under construction between Noida and Gurgaon. If I just stay at commercial real estate portfolio, in FY25, we will see a rental income of 125 to 125 crores, which will be reflected. And I'm just talking about rental income and not other ancillary incomes, which will be reflected in the accounting P&L. And this, as our assets reach peak occupancy and as our under construction asset gets operational in next 3 to 5 years, this annuity rental income will grow to 450 to 500 crores. So that's one journey for your viewers to understand. The second part of the story is our residential portfolio. Today, of 12 million square foot, residential portfolio is 7.5 million square foot. Let me just double click that for further clarity. Of that, 1 million square foot was our residential portfolio, Estate 128, which we successfully launched in Noida last year. That's where we booked 1,800 crores. This will get reflected in the P&L 4 years later once we deliver possession. What is going to come, as you asked me, next couple of years, we are going to launch our second residential, which is Estate 360 in Gurugram in Sector 36A on Dwarka Expressway, which is first intergenerational product of Delhi NCR. That has a potential of booking value of 4,000 crores. That is what we have guided that we will see in FY25. Having said that, real estate being a portfolio of projects, what is also important for the viewers to note is that we have built a very healthy pipeline to continue the launch in FY26 and FY27. This is at the back of what you mentioned at the start of your program. We announced an acquisition of another 18 acres in Gurugram in Sector 36A under a joint development model, which will give us another 4 million square foot, which has a gross development value potential of 9,000 crore, which will be launched in FY26 and FY27. So in summary, if I summarize for your viewers, our rental income is going to grow from 120 crores to 450 to 500 crore based on existing portfolio, a booking value from 1,800 to 4,000 crore, and then we will see, we already have a pipeline of another 9,000 crore for FY26 and 27. And what we have also shared with the market is that our aspiration and a calibrated aspiration is to continue to add 2 million square foot in a residential portfolio every year and 1 million square foot in a commercial portfolio every year, which is yet not reflected in the numbers that I'm talking about.
Right. Just to quickly wrap that out, Rishi, this is going to be in the form of a joint development. What is the share that you have in this JD for Project 360?
So the one that we are going to launch in July, which is on 11.8 acres, which was our first joint development deal in Gurugram. There, the share between it's a revenue share model between landowner and us. We have 2/3 share, and landowner has got 1/3 share.
Let's move on from that and get an understanding of what lease rentals look like and what is the kind of revenue you're picking up from lease rentals. Your total lease area is close to 0.9 million square feet odd. What is the rental lease then? Going into FY25, what should the street be factoring in terms of lease rentals? And secondly, help me understand this on the commercial piece. This is in partnership as well, right?
Yes.
So break out the rentals expected in FY25 and this agreement with the partner that you have. What are the plans going ahead? Could we be expecting more sort of strategic moves on the commercial piece?
Absolutely. So you're right. We have got close to 1 million square foot already operational on a 100% basis. In FY24, our P&L reflected just the rental part of the top line at 65 crores. That is going to increase to 120 to 125 crores based on 3 operational assets: Max Towers, Max House, and Max Square Phase 1 on Noida Greater Noida Expressway. This portfolio at 100% occupancy has a total potential of 145 to 155 crores. That's number one. Number two, we also have 2 commercial office assets, which we are calling as Max Square 2 on Noida Greater Noida Expressway with 1 million square foot of development potential, and another one, which is our first one in Gurgaon on Golf Course Extension, 7 acres, 1.6 million square foot. As we speak, we have started the construction, and in 3 to 5 years, that annuity rental income top line, when added to the current portfolio, will translate into 450 to 500 crores, which I mentioned earlier. Please note, this does not include additional commercial office that we will add to our portfolio subsequently in coming years. Coming to the second part of your question in terms of partnership, we're really delighted and proud to have New York Life as a long-term standing partner in real estate. New York Life is not only a shareholder in the listco at 23%, but now they are our commercial office platform partner, owning 49% of individual assets, both greenfield that is under development. And if you recall, we recently announced a few weeks back, New York Life has further committed 388 crores to acquire 49% in our operational rent-yielding Grade A plus asset, Max Towers and Max House. So that is the partnership with New York Life, which is a great reaffirmation of 2 things. It's important for your audience to know. Number one, it clearly shows our ability to churn the capital full cycle, investment to exit. And second, it shows a great confidence of New York Life in our ability to
Rishi,
deliver.
just very quickly, of course, it's great that you've got New York Life and that is a stamp of approval. But why not? I mean, is this even on the cards with, of course, MSME REITs now becoming a reality in India? Would you consider fundraising or getting in commercial partners to the REIT route?
So, not yet. Our focus right now is to scale annuity portfolio. As I said, today our portfolio is 4.4 to 4.5 million square foot, which we would like to consolidate and scale. And of course, at some point in time in future, we will evaluate multiple exit routes that will be available to us, and potential REIT could be one of them. But that is not the focus at this point in time.
Right, that is not the focus currently. But thank you very much for joining in, Rishi, and good luck with business going ahead. This is, of course, great news coming in for the company. Well, moving on from there, it's been the RBI, and that's been the star of the street as well over the last couple of weeks. What we believe is that the RBI has announced a fourth buyback to the tune of 40,000 crores of government bonds due to the ample cash reserves which they've been sitting on. Mimantsa is joining us with more detail on this. Mimantsa, we've already seen 3 buybacks, and they weren't successful, to say the least. But of course, the RBI is not quitting. They've come out with the 4th buyback this time, and that too to the tune of 40,000 crores, despite a tepid response. What has prompted this buyback to begin with?
Samina, the purpose of buyback is, of course, to inject liquidity, and liquidity had been in deficit for the longest time. But the core liquidity, or the frictional liquidity as we call it, which is measured by the government's cash balances, that had been in surplus. And add to that the dividend transfer that came in from the government, came in from the RBI of 2.1 lakh crore rupees, that had actually ballooned the cash balances that the government has. And since it's an election time, cash balances are in fact much higher than what they had been in the last 2 Lok Sabha elections. So since election time, there's a model code of conduct. The government cannot spend this money. So they want to maximize the returns on these cash balances. So that is why they have come up with the buyback operations. And what we get to know from our conversations with bond market traders is that they are thinking probably the government wants to redeem the government securities that were due for maturity this year. Earlier, the last 3 buybacks had a bond mix of ones that were maturing next year in January, February. But in the last 2 buybacks, we have seen that the bond mix has been changed, and they are expecting a better response to come in if the maturity of these bonds is a little shorter. So they have come up with June, July bonds and November. So that is what the government thinking is right now.
So, Mimantsa, of the 1.6 lakh crore worth of bonds that were offered for repurchase, the RBI only accepted bids amounting to 11%, so 18,000 odd crores. Why did this response fall short? I mean, if this is to infuse liquidity, what are we missing here?
So liquidity, of course, buyback, the purpose of buyback is to ensure liquidity. But RBI has also been doing its variable rate repo auctions, which
happen at the start of the month.
Right. They happen
frequently.
Yeah, frequently, as and when the requirement arises. So on liquidity front, things are not that difficult. So that is why. And also banks who are holding these bonds, they are holding it in their HTM portfolio, which is the held to maturity portfolio. So they would not want to, they would not want to sell those bonds before maturity. Yes. And they would want to wait for the election results, and we have JP Morgan bond index inclusion money that will flow in. So they would want to keep those portfolios.
So anticipation is that yields will improve and there will be M2M gains after a very, very tough run for the debt market, right?
Right. Samina, there's one more interesting point here. RBI has a dual objective. They are also the government's debt manager, and they are also the monetary policy regulator. So they have to ensure that the rates, there's no sort of signal to the market that the rates are going to fall, and they have to also ensure that the government's borrowing costs are lower. So pricing is an issue, is what we understand. The price at which banks had bought these securities 10 years ago or whenever, those were higher, and now they don't want to sell it as at a loss. So that is why the response that we have been seeing is not that that's
so
important.
This is the 4th buyback, but the response is more than likely going to be tepid given the precedents that we've had of the last 3. Well, that's of course a very interesting piece of data that Mimantsa brought us. On that note, we'll take a break. We'll come back. We'll talk to Man Industries. Nikhil Mansakhani joins us on the other side to talk to us about the quarter that's gone by and the outlook for FY25.
active is Campus Activewear. Welcome back to NDTV Profit, and Campus Activewear is the stock in focus, 12.55% higher today. Extremely strong show. That aside, we're seeing some traction in Paytm, obviously so, because of the news flow in one of the leading dailies. GE Shipping is up about 4.5%. Sumitomo Chemicals is about 4.23% higher. So that's not done too badly. Suntech Real Estate. Actually, I think what Brigade has done is got about a little bit of activity in itself, in Suntech, in Prestige, and a few others. Those are a few at the broader end of the spectrum which are doing well. What is not doing well, there is weakness in PNB Housing, so down about 6%. There's weakness in IFB, down about 5%. Hudson Agro, yesterday's top performer, is down about 4% in trade, so that's not having a great day. Macrotech is not having a good day, about 2 to 3% higher. And Linda India after the numbers, and ITI post the numbers, I think 2.5% a piece for both of those. So those two are not doing that well. Yesterday's key loser, Inox Wind, is still sulking in trade today, was down about 10% yesterday. I think it is still in the red, about 4-5%. Okay, now this is Linda India. But Inox Wind will come up on your screen. Was down about 6% or 7%, Inox Wind, at a point of time. We should just get that stock up on the screen for a minute. Still down about 7.5%, not looking good. Man Industries too has suffered a little bit in trade, post the numbers. And Nikhil Mansukhani joins in to talk about the numbers and the outlook ahead. Nikhil, good having you. Thanks for joining in and taking the time out. Wonder why, what happened in quarter four, and relative to the expectations of the street, the small miss there, is there a specific reason for the same? Anything that happened in quarter four? And how is the immediate quarter looking like? Let's start with that first.
So, hi, good morning, Neeraj. Yes, a little bit of a miss in quarter four, but overall the yearly targets were achieved. We did almost a 40% growth this year from last year. Majority of this quarter was done, the water business was there, and that's why a slight bit of a miss on the quarter. But like I said, that we are looked upon morely on the yearly basis. So overall in the year, we've done quite well. And looking forward, the quarter one is quite strong. And quarter two and three are even stronger with more export book. The unexecuted order book is almost at 2,200 crores currently. And this year, we're looking also at a growth of almost 20-25% from almost 3,000 crores.
So the earlier belief was that you could not, I think in a couple of conversations that we had with Mr. Ram Mansukhani, the numbers that were spoken about on the back of new plant coming in, orders, etc., were fairly, for lack of a better word, stratospheric. I'm just trying to understand, 20-25% in FY25 means that you have a very tall order in FY26 in order to reach the guidance that was given earlier. So is that on track, or are you revising that downwards? No,
that's on track. The reason is because both the projects which are ongoing are on track. And that's why 25-26 is far more bullish. And 24-25, this year also, we had given a guidance of 2,800 to 3,000 crores, which we've achieved more than that. The current year also, the target which we're giving between 3,600 to 3,800 crores, we should be achieving that because we have a strong order book. Also, we are L1 in quite a few new projects. So that way, company is doing well. 26 definitely will be a much larger turnaround for the company, with both the projects coming live and the turnover kicking in, and the EBITDA is also starting to go up, looking at the locations and the businesses. So we're quite bullish on that, and we're going to achieve the targets what we are committing.
So, from earlier EBITDA levels of about 10-odd%, 2020, 2021, you slid down a little bit, you come back to about 8-odd%. You reckon double-digit EBITDA margins is a possibility in FY25, or do you see that in FY26?
No, 25, we should be at EBITDA with the business we've got around 10%. Okay. 26 onwards, we will be hitting 12 and so forth, 12 to 13 to 14% in the next 3 years.
Wow. If you do 13%, that was a number that you probably last clocked in 2013 or FY13, if I'm not wrong, Nikhil. So in that sense, kudos there. What about the expansion plans? How are they? I mean, are they coming on stream? Because there's a lot of talk around how a lot of expansion projects are getting delayed, especially because of the supply chain uncertainties in the first quarter.
No, they both the projects are absolutely on track. In fact, good progress is happening, and we're more than confident to achieve the timely construction and starting the commercial production for both the projects.
Okay, Nikhil, what about order booking right now? One, what is the current order backlog? And I reckon that with the new plants, you get into a trajectory which is, or a market which is different than what you have existing, or even currently you are diversifying away from what has been the traditional stronghold.
So it's a mix of both. It's our strength, which is our LSAW, HSAW. We are doing that as well. We are expanding in that as well as the stainless steel market, which is a slightly newer market for us, and we are going into it, and it's a higher margin business. So it's a mix of both, which will help drive the growth of the company up.
Okay. I believe there has been a bit of fundraising activity done, Nikhil, correct me if I'm wrong, but if my memory serves me right. Is that it, or would you need to do any further fundraising, equity or debt?
As of now, we are not doing any more fundraise. We haven't thought about it. We are just right now focused on the execution because we have all the financial closures in place for the projects. So currently, no, but maybe in the near future, looking at the post 3 years, 2 years down the line.
But just to round it up, for the expansion plans that are on stream right now, you do not require any additional equity fundraise.
Correct.
Okay, great. Well, Nikhil, great having you. Thank you so much for taking the time out and being with us, and all the best for the year ahead.
Thank you.
That's Man Industries with their thoughts on the numbers and the margins going ahead. The stock, a couple of percentage points toward the management, confident about meeting the numbers set out in FY25, more importantly in FY26. With that, it's a wrap on this leg of India Market Open. Up next on Talking Point, Dinshaw Irani Johnson to talk about all that they are doing in the run-up to the elections and afterwards, and with their portfolios. Stay tuned.